slide, and I will slide. Oh yeah, that's great. Hi everybody. My name is Ada Albright. I'm the director of the NCRC National Training Academy here in Washington, D.C., and we're here to present you with two webinars today. The first one is going to be on CRA 101, and the second one is going to be on CRA modernization. I just wanted to give you some ground rules and let you know how we're going to conduct things before the training begins. Right now I have the phone lines open, and the reason I have them open is to make sure that everyone's going to be able to hear the presentation. So if you have any problems with hearing the presentation, just let me know before we get started and we'll do that. We're very happy today to have well, we have about 20 people online via webinar from all over the country. Some of these people are members of NCRC. Some of them are nonprofit organizations that are not members with NCRC yet, but we hope that one day they will become members. And some of the people are from government organizations. And we're really happy to have everyone here to learn about CRA modernization and also CRA 101. We have people in the NCRC National Training Academy as well. So this is an opportunity where we have folks that are both online and folks that are in person, which is going to make this a very interactive session. Some ground rules. For the people that are online, if you have a question, at the bottom of the screen, you'll see a chat area. Use that chat area to type your questions. Periodically, we will stop to get questions from the people online. For the people in the room, if you have a question, just merely raise your hand, and we will take time to answer those questions as well. The reason we're doing these two webinars is because we're trying to get you prepared for the upcoming June 11th event that we're having all over the country, and the main focus of this event is CRA modernization. So we want to make sure that people are up to speed, and also we found that there is a need for people to know more about CRA 101 and also the bill. We're going to be having these webinars at least, maybe if I can talk Josh into it, maybe once a month, just to keep people up to speed, because there's always going to be questions that are going to come up concerning this new bill. Okay, so let's get started. You saw the area that for putting your questions, and I'm going to go ahead and mute the telephone lines right now unless anyone on the phone line has any questions. Okay, I think everybody's good, so I'm going to mute the phone lines.
You'd like your participants to be able to unmute their own lines by pressing *6, press 1 for yes and 2 for no. All participants have been muted. You will now rejoin the conference.
Okay, this first presentation from 1:30 to 2:30 is on CRA 101, the basics of the Community Reinvestment Act. Our presenter today is Josh Silver. Josh is the Vice President of Research and Policy with NCRC. There's a little blurb about him in the description of the training, so you'll be able to see that. But basically, Josh has 8 or 9 years with NCRC. Oh my goodness, I've been corrected. Josh has double that. He has 14 years with NCRC. As a matter of fact, I think he was here to paint the building when it opened. So I think that you're like one of the first employees, I guess. I also want to remind people that NCRC is having its 20th anniversary next year. So I want to make sure that people know about that and know that the conference is coming up in March of next year. So that's just a little plug for the national conference. So Josh is the Vice President of Research and Policy. He's been with NCRC for 14 years. He's a proud father of a daughter, and I'm not even going to guess what her age is, but I know that you're going to get a lot of experience on CRA 101. Feel free to ask questions. We want this to be as interactive interactive as possible for you. And we also hope that you all that are on the call right now will stay with us for part 2, which is going to be CRA modernization, which will talk about the bill. Okay, so without any further talking, unless anyone has any questions, I'm going to pass it on to Josh.
While we're getting mic'd up, how many participants are NCRC members and how many participants are nonprofits that are not NCRC members?
I don't think I can tell you that, but I can tell you that the majority of people on the line are non-NCRC members.
Okay,
The
good.
people in the room are NCRC members.
Okay, well that's useful to know because I think a little 2-minute intro into NCRC is in order. Good afternoon. As Ada said, I'm Josh Silver with the Vice President of Research and Policy with the National Community Reinvestment Coalition, and I'm going to endeavor to look into the camera and smile, but sometimes doing that is a challenge, but I hope you can all follow the presentation on the web, and if you have any problems, please send Ada, type a note to Ada. John is
I'm just making
asking,
sure that they can hear you online.
okay, and we want to know if you can hear me online. So if there's any issues with that, please let us know. So the National Community Reinvestment Coalition, I think most people participating are nonprofits that are not yet members of NCRC. We are a organization of 600 community organizations across the country dedicated to increasing access to credit and capital for working class and minority communities. We advocate before Congress and the federal banking agencies to strengthen the laws against discrimination in lending and also strengthen the Community Reinvestment Act that imposes an obligation on lenders to serve communities consistent with safety and soundness. And this seminar is about the Community Reinvestment Act. We, as well as advocating before Congress, we advocate before the federal regulatory agencies to make sure that the regulations implementing the law are as strong as possible. As well as acting as a trade association on behalf of community organizations, we also operate a number of programs with our member organizations. I'll mention 2 real quick. For our nonprofits that are housing counseling agencies or that build and redevelop housing, we offer a foreclosure prevention program. People on the verge of bankruptcy or foreclosure can contact our mortgage advisors, and our mortgage advisors will work with the lending institutions to modify the loans and in some cases to refinance the loans so people victimized by abusive lending can stay in their homes. That's called the National Homeownership Sustainability Fund. Another program we operate for organizations that provide assistance, technical assistance to small businesses is we operate a small business technical assistance program primarily on the East Coast, but it may be expanding into Texas. So I wanted to mention that we also operate a number of programs with our member organizations as well as acting as a trade association before Congress and the federal regulatory agencies. And our collective goals are to increase access to credit and capital, to build wealth in neighborhoods through small business ownership, through home ownership, and also to make neighborhoods healthy and viable and vibrant places to live. So we are also interested in affordable housing in general. That means rental housing as well as home ownership, commercial development, development of community facilities like healthcare clinics. And we're going to talk about how the Community Reinvestment Act makes that all possible. We've divided this seminar into 2 parts. Roughly the first hour we'll talk about the Community Reinvestment Act and provide you a CRA 101 training so you know what the Community Reinvestment Act is and you know how it increases access and how it helps you build and revitalize neighborhoods. And then part 2 will be about a bill that is to strengthen the Community Reinvestment Act. And the reason why we are offering part 2 today is because we are involved in a nationwide campaign to strengthen and update the Community Reinvestment Act. And we want to talk to you today about how that is vital for our collective missions to build and to revitalize neighborhoods. So if you go to the first slide on NCRC presentation on CRA, empowering communities and building wealth. And let's go to the first slide, how CRA works. And if any of you have issues with the PowerPoint, again, type in a question or otherwise contact Ada, and she will give me a sign of when I am getting a question. Well, what is the Community Reinvestment Act? The Community Reinvestment Act was passed in Congress, by Congress in 1977 to outlaw discrimination against neighborhoods. And discrimination against neighborhoods is often known as redlining, where lenders would literally draw red lines. I'm drawing a box with my fingers, or trying to, draw a red line around neighborhoods, and the lending institution would tell loan officers, do not make loans in these neighborhoods, even though the bank was collecting deposits from the neighborhoods. And oftentimes, this was predominantly minority neighborhoods and low and moderate income neighborhoods that were receiving this treatment. And there's nothing more damaging to a neighborhood. If you don't have access to home loans or small business loans, it is very hard to maintain a housing stock or to expand and maintain small businesses. And residents with the means will move out of the neighborhood, and the people left behind tend to be poorer. Unemployment will increase, poverty will increase, and neighborhood blight and decay will increase. Well, Congress was prodded by some very effective advocacy groups in the 1970s to address this. And so Congress passed the Community Reinvestment Act in 1977. And CRA says, first of all, that this type of discrimination is illegal. And second of all, institutions have an affirmative and continuing obligation to serve the credit needs of communities consistent with safety and soundness. So it's not enough for a bank just to be, a branch just to be sitting in a neighborhood and for people to come into the door and for the bank to treat people fairly. That's very important. For applicants to be treated fairly and for no discrimination to be going on. But CRA goes one step further. It says to financial institutions that you have an affirmative obligation to serve credit needs. In other words, you have an obligation to find out what the credit needs are. You have an obligation to do marketing in the neighborhood, to talk to neighborhood residents, to see who is creditworthy for a homeowner to purchase a home, or who is ready to start a small business. And for residents who are not ready yet for that step of home ownership, you still have an obligation to serve their needs, whether it is to open a checking account or a savings account, or to finance rental housing for people who are not ready yet for home ownership. So an affirmative obligation is a very important thing to remember. It is actually saying you have an obligation to go out into the neighborhood and to find out what the credit needs are. So how does CRA get implemented? I mean, it all sounds like a very lofty and noble goals. But the way CRA is implemented is federal regulatory agencies conduct CRA exams. And think of a CRA exam as a report card. You get a grade. And a federal agency will determine whether the bank is doing an outstanding job or a satisfactory job or not such a great job in serving credit needs. And imagine if you're a student in school and your report card is on the World Wide Web. Well, you're going to have a motivation to work hard because you know that your report card is on the World Wide Web. Well, in fact, bank CRA exams are on the World Wide Web, and we're going to describe CRA exams in detail. And that is a very powerful motivating factor for banks because they know that their records of lending and investing in neighborhoods will be publicly scrutinized by members of the general public. And in fact, when the bank CRA exams are occurring, anybody from the general public can comment on the bank CRA exams. And we'll talk about how those comments have influenced the bank grades. And when banks want to merge and acquire another institution, any member from the general public can also comment on a bank's performance. And we'll talk about how that has been effective as well. So we at NCRC think that CRA is a win-win proposition. CRA helps neighborhoods revitalize themselves through home ownership, small business creation, affordable rental housing, banks financing community facilities like health clinics. And also, CRA has, it's a win-win. It's a win for neighborhoods, but it's also a win for banks because banks have realized some new and important business opportunities that they may have overlooked if the CRA had not been law. So if we go to the next slide, let's talk a little bit about CRA's effectiveness before we talk about how the nuts and bolts of CRA. Well, we have some indication that CRA has literally been responsible for trillions of dollars of loans, investments, and services in neighborhoods over the last 30 years. There are estimates of about $6 trillion, at least, of loans, investments, and services leveraged by CRA. And in fact, Federal Reserve economists and researchers from Harvard University have documented that CRA did in fact increase lending and investment and services to low and moderate income borrowers above and beyond what would have occurred if CRA had not been law. And there was a statistic during the 1990s, banks increased lending to low and moderate income people by 39% from 1993 to 1998. That is more than twice the rate of increase of lending to middle and upper income people. So CRA says you don't have to hit a specific amount of loans. It's not a quota system. So the fact that lending to low and moderate income people increased at twice the rate of lending to middle and upper income people during the 1990s, I think is testament to the fact that CRA did enable banks to find more profitable lending opportunities. And remember, the 1990s was before the big surge of risky lending. So this was really, it's a law that really promotes responsible lending and service to low and moderate income people. So we go to the next slide. I guess, Ada, are you the master controller of the slides? Okay. And as far as you can tell, is everybody able to participate and follow? That's great. So, just give you a few more statistics. Since 1996, we're just going to talk about two types of lending: small business lending and community development lending. Community development lending could be anything from a construction loan for an affordable rental development to a loan to support to help finance a supermarket development. And just in the last 12 years, 1996 through 2007, there was more than $1 trillion of loans, of small business loans and community development loans. So I just wanted to give you a concrete example in a 12-year time period, just two loan types, $1 trillion. And I didn't even talk about home lending. Home lending is actually in a much higher volume than the two loan types that I mentioned. And also, on the next point on the PowerPoint is very, very important, that CRA has promoted safe and sound and responsible lending. You may have heard during the presidential campaign is, oh, CRA was responsible for the subprime meltdown because it encouraged banks to make risky loans. We call that the weapons of mass distraction, or the big lie. It actually the reverse is true. The law was written to say, meet community credit needs consistent with safety and soundness. And the senators and congressmen who wrote the law in 1977 were very wise. And that clause has enabled CRA to survive and thrive. And in fact, the evidence suggests that CRA-covered banks did make safe and sound loans. The high-cost loans or the subprime loans that really drove the crisis, well, banks only made about 6% of the high-cost loans that were even considered on their CRA exams. So the vast majority of the high-cost lending was made by institutions not covered by CRA. And these institutions include mortgage companies that are not covered by CRA. Mortgage companies do not receive deposits from the community. So you can think of a mortgage company as a lender, but it doesn't take your deposits to make loans, unlike banks. The next couple of slides, we'll just skip them over. It shows just graphically the tremendous increase in CRA small business lending and community development lending over the last 12 years. And a pretty significant increase each year of that type of lending. Okay. The slide with the green bars, that's the small business lending. And the slide with the blue bars, that's the community development lending. And you can see in 1996 there was $18 billion of community development loans, and that increased to $64 billion in 2007. So about 3 times the amount on an annual basis over the 12-year time period. So then we go to the next slide. It says CRA exams, frequency, and ratings. And now we're going to talk a little bit about how the nuts and bolts of CRA, how it actually works. The CRA exam is conducted about once every 2 years for banks and thrifts with assets of more than $250 million. For small banks, the federal agencies define small banks of assets less than $250 million. For us, an institution less than $250 million is in fact a pretty big institution. But they call that a small bank. And the law was changed in 1999 to conduct CRA exams of small banks once every 4 or 5 years. We are actually, in the next part of the presentation on CRA mod, we're going to actually try to change that back to once every 2 years. Because think of yourself as a student. If you're going to have an exam once every 2 years, you're going to study harder than if your exam is once every 4 or 5 years. If your exam is once every 4 or 5 years, you might study in year 4, the 1 year before your exam. But if your exam is once every 2 years, you're going to be studying at least every other year because you know your exam is coming, as opposed to maybe studying only 2 years in a decade if your exam is once every 5 years. And the same principle applies to banks. Banks and thrifts receive 1 of 4 grades on their CRA exam. Outstanding, which is kind of like an A. Satisfactory, which is kind of like a B. And then needs to improve and substantial noncompliance. Needs to improve and substantial noncompliance are the 2 failing grades. So for the next slide. We have 4 federal agencies that conduct CRA exam. And when I usually get to this part of the presentation, I say, isn't life easier if there was only 1 federal agency that conducts CRA exams? Well, stay tuned. This summer there's going to be talk about regulatory reform and restructuring, and we may get 1 federal agency that conducts CRA exam. But right now our world's a little more complicated. I'm going to rattle them off. The Federal Reserve Board. Think of Chairman Ben Bernanke and interest rates and bailing out banks. Well, I didn't say that, but anyway. The Federal Reserve Board also conducts CRA exams for banks that have a charter with the state government. If you're a bank, you can have a charter with the state government, or you can have a charter with the federal government. The charter basically is a document that lets you exist. If you have a charter with the federal government, you are examined by the Office of the Comptroller of the Currency, which is not as well known as the Federal Reserve Board. Its initials are OCC. If you have a state-chartered bank, state charter, you could also be examined by the Federal Deposit Insurance Corporation, or FDIC. You think of deposit insurance, well, the FDIC also conducts CRA exams for state-chartered institutions. Remember the movie It's a Wonderful Life, the Bailey Buildings and Loans. Well, today's successors of Bailey Building and Loan are called savings and loans, or thrifts. And the Office of Thrift Supervision conducts CRA exams for savings and loans. Now there is one organization that kind of coordinates the activities of these 4 agencies. It's called the Federal Financial Institutions Examination Council, or the last agency listed on this PowerPoint, FFIEC. Say Federal Financial Institutions Examination Council 10 times fast, and I'll give you a prize. Its webpage is ffiec.gov, and if you don't know what agency oversees your bank, you can actually go to the FFIEC webpage and do a search, and it will tell you which agency supervises your banks.
Did you want,
Well, not right now, because I'm going to demystify things and say if you are a member of NCRC, and here's a plug for the non-members, non-profits, to join NCRC, you can actually receive technical assistance from us. If you know, it does, at least initially, it can be a little off-putting to try to negotiate the web of these 4 federal agencies. And we can help you go to the web and find and negotiate the websites and find the agency that oversees your bank. And even if you're not an NCRC member, we'll be happy to help you find the agency that oversees your bank, and actually to retrieve the CRA exam of your bank. And once every 3 months, on a quarterly basis, the federal agencies produce a list and release a list of banks or thrifts that are going to be examined, going to have their CRA exam during the next 3 months. And as a member service, our membership department actually emails the list of CRA exams that are coming up. And if you want to comment on a CRA exam, well, this is a service that differentiates members from non-members because this takes time. We can help you figure out how to comment on the bank's CRA performance, how to look at the data and comment on the bank's CRA performance and actually influence the grade of the bank. So you go to the next slide. How and why the public should comment on CRA exams. Now, I mentioned before that there's 4 grades. Outstanding, satisfactory, needs to improve, and substantial noncompliance. Well, the last number of years, 98 to 99% of the banks pass their CRA exam. They get an outstanding or satisfactory. And sometimes I get the question, well, if 99 and 98% of the banks pass, where's the teeth in the law? Well, the teeth in the law is that banks are in the public reputation business. And a lot of banks rather get the outstanding rating than the satisfactory rating. They will issue press releases. We have been judged to be an outstanding reinvestor by our federal agency. And they'll boast about their outstanding rating. And if you commented on a bank CRA exam and you think that there is a legitimate weakness, and the federal agency agreed and actually gave them a B, a satisfactory, instead of an A, well, a lot of the large banks, or a lot of banks, will go back and try to improve their performance. And how do they improve their performance? They actually improve their performance by going back and making more loans and investments in low and moderate income neighborhoods. And guess what? If they improve their performance from a B to an A, you have succeeded in increasing access to credit and capital for low and moderate income neighborhoods. So you can just see how the grading process can influence. And in fact,
Josh?
Yes.
1 second. People just got additional.
And actually, I'm going to talk for about 2 more minutes, and then I'm going to, because I've said a lot, I'm going to talk for about 2 more minutes, and then I'm going to pause for any questions. I want to give people an example of how this process unfolds. Also, I should say that banks can be examined in many geographical areas. They get 1 grade overall, but then they get separate grades for states and sometimes for metropolitan areas. For a state grade, you can get something like a low satisfactory rating, which is a B-. Or even on a state level or a local level, you can get a failing grade. So even though the bank is passing overall, in one state or metropolitan area, it may get a B- or a C. And think about the bank, let's say it gets a B- or a C in West Virginia, and it wants the state's put millions and millions of dollars in deposits in banks because they have payroll and other needs to put deposits in banks. Is the bank going to go to the state governor and say, oh, look, we got needs to improve in the state of West Virginia? Of course not. So the bank is going to go back, and if they really want business in West Virginia, they're going to improve its performance. So that you get a sense, and that means more loans and investments in West Virginia for low and moderate income people. And in fact, a few years ago, there was a bank called West Banco in West Virginia. And let's say all banks were making 25% of their loans to low and moderate income people. This bank was making like 5% of its loans to low and moderate income people. And so you can use publicly available data to document this. The publicly available data is a very powerful part of the CRA exam process. So we helped a member organization in West Virginia document this. And actually the bank almost failed its CRA exam. And it wanted, at the same time, it wanted to acquire another bank it had to submit an application to acquire another bank. It submitted an application to the Federal Reserve Board. Well, its merger was held up for 1 year. So the fact that this bank almost failed its CRA exam and its merger was held up for 1 year did encourage this bank to make more loans and investments in low and moderate income communities. A few years later, we looked at the bank data, and guess what? The bank was making a lot more loans to low and moderate income people and making a lot more investments to low and moderate income people. So that's an example of how the process can work. Let me stop here, Ada, and see if there are any questions.
Okay. Or they can type it in the chat. I don't
So people can type questions directly into the chat rectangular boxes at the end of your, towards the bottom of your screen, or there's like a little hand signal that Ada tells me you can use to answer a question. But also, are there any questions in the room? Either I'm being exceedingly clear, or people are, I'm putting people to sleep. So I hope I'm being the first one. I hope I'm being exceedingly clear. At least I got some smiles and laughter in the room. Yes?
Josh, I had a They own other kinds of financial institutions.
That's an excellent question. The question is for people who did not hear that online is, the question was, banks only made 6% of the high-cost loans. So how come there were some banks that got into so much trouble, especially the larger banks in the country? We'll learn more in the CRA modernization part of the discussion, is that even within a bank, not all parts of it are covered by CRA. The part of the bank that is covered by CRA is the bank that makes loans. But actually a bank also does a lot of investments. And one thing that some of the large banks did is they purchased mortgages made by other institutions that were the risky mortgages. So some of the banks got into trouble because they were purchasing risky mortgages. And in fact, this is very important for the CRA discussion, that activity of purchasing the risky mortgages is not automatically on the CRA exam. And that's actually one thing that the CRA modernization bill will change. The other thing is that the mortgage company affiliate of the bank is not automatically on the CRA exam. It's at the option of the bank. So there were some large banks. Banks are owned by holding companies. And the bank, so the holding company owns a bank, and the holding company can also own a mortgage company. And the bank that's covered by CRA, merrily going along, making safe and sound and responsible loans. And then the mortgage company affiliate is doing the risky stuff. And that's something that also got some banks into trouble. But we should also say that there are some large banks into trouble, but most of the institutions that have failed and collapsed, the great majority of them, are the mortgage companies that are not covered by CRA at all. And there was a statistic, I think if I can remember it correctly, is there was 169 institutions that failed in 2007. These are the institutions that were reporting their data to the federal government. 169 of them failed in 2007. 167 of them were mortgage companies. So that's a phenomenal statistic, that 169 institutions that failed, 167 of them were mortgage companies. That's an excellent question. Any other? Yes, sir.
Now, getting 90 up to 90. On the right now, what is happening? Low income or middle income with no credit at all. Are they going to be all in violation of CRA?
That is an excellent question. Right now in this time period, the question was, right now in this time period, there's a tightening of credit, and that's going across the financial industry because we are in a dire financial situation. What the federal regulatory agencies have done is they've written guidance to the banks to say, we want you to make loans that are safe and sound. So we don't want you not to make loans. We want you to make loans that are safe and sound. So I think one thing that community organizations should do is, if there was a lending program that was very successful, that was reaching populations that you serve. There is an organization that serves Columbia Heights, Washington, D.C. in our room. And that's a very vibrant community that's Hispanic, African American, very white. It's an integrated community. But so if there was a bank that was successful in reaching those populations, but they're not reaching the populations anymore with the same product, that's something you can raise to the CRA examiner. And it was a good, safe, and sound product. That's something you should raise to the federal agency that oversees the bank. First try to talk to the bank, and if the bank is just not being receptive, then you can engage the federal regulatory agency.
Josh, I have a couple of
questions.
The first one is, live in a low-income mobile CRA help us get low interest?
Yes, you want me to repeat that?
Just paraphrase.
Sure. It's an excellent question. There's a mobile home park in Boulder, Colorado, and they want to move to a cooperative form of housing, which often is an affordable form of housing and often gives community residents more control over their housing. And in fact, CRA does provide points for innovative and flexible lending programs. So a lending program that allows these residents to acquire the mobile homes and own them cooperatively is an example of an innovative and flexible loan program. So, for example, if the organization was a member of NCRC, what the organization would do is they would give us a call and we would discuss with them what are the major banks in your community. And maybe they give us 3 or 4 or 5 banks. And we can work together to look at the bank CRA exams. And we would see what the banks are doing now on their CRA exams. And there might be 1 or 2 of them that are doing innovative and flexible loan products. Maybe not lending to cooperatives, but you know, their CRA exams indicate that they are doing innovative and flexible loan products. And so those might be banks that we want to approach first because they seem to be receptive in doing innovative and flexible lending programs. If we can actually find a bank, a specific example of a bank that is doing lending to cooperatives, that's golden because we can take that example and talk to other banks in the community and see if they'll replicate those programs. There are also resources from the federal agencies. For example, the Federal Reserve System has community affairs officers, and we can help you get in touch with the community affairs officers of the Federal Reserve Board. And they're there so you don't have to reinvent the wheel. I mean, maybe they know of an example of a bank that does lending to cooperatives. So then you can share information with the banks in your area of actual case studies of banks doing this type of lending. In addition to the Federal Reserve Board, as I mentioned before, there's 3 other agencies, and they also have something analogous to community affairs officers. So it's through the process of looking at CRA exams, engaging the federal regulatory agencies, that hopefully we can help that mobile home park get a loan to start a cooperative.
Okay, I have one more question.
Sure.
It's almost 10 after.
Sure.
Is there always enough time for a bank improvements made for when the next grade?
Well, that's actually a very interesting question. When do the grades get improved? Is there a process to, well, there is actually a process of, and we actually hope to change this because it's kind of a secretive process. If a bank undergoes an exam and the examiner says, well, you've actually failed your exam, the bank has the right to appeal its rating. Can you imagine a student appealing its rating if the student got a failed grade? I wish I had that. I wish I had that ability when I was a student. If there's going to be continue to be an appeal process, it ought to be an open process where members of the community have the right to also comment on the appeal process. This is actually what happened in West Virginia. The bank actually initially failed its CRA exam. There was an appeal process, and then the bank passed its CRA exam. Still, the process was painful enough so the bank realized it had to go back and make more loans and investments. But because NCRC knew that there was a possibility this was occurring, we actually said to the federal regulatory agency, we suspect there's an appeal process going on. We want to comment. And the federal regulatory agency said, well, that's very astute of you, but we're not going to consider your comments. Nevertheless, you know, we were still effective in intervening and creating a win-win in that community because the bank did make more loans and investments. But the appeal process is something that we hope changes, so at least it's open and transparent, and the banks and the community organizations can both comment. But typically, it's actually, you know, I hope this answer is not more complex than it needs to be, because in most cases it's really you've had a CRA exam, and if the bank gets a grade that it doesn't want, even if it just gets a satisfactory but it wants to get an outstanding, in most cases the process is the bank's going to work to improve its CRA rating over the next 2 years. So my timekeeper, and I agree, says I should continue. We will have an opportunity to take some more questions. So if you have a question, jot it down. And also, if we don't have a time to answer all the questions, you can send them to us, and we can also, answer your questions offline as well.
I'm putting your email address in.
Oh, don't do that. No, Ada is putting my email address down. There are different types of exams for different types of banks, and we're going to talk about the small bank exam. That's the slide that's on the PowerPoint now. These are institutions that have assets of less than $250 million. They have a lending test only. How many loans are you making to low and moderate income people or low and moderate income communities? Could be home loans, small business loans. They can get bonus points for doing investments or something called a community development service, but their test is really just a lending test. The test is, quote unquote, the easiest for the smallest banks because the regulators have judged, well, these are the smallest banks, so they don't have the capacity to do all the activities that the larger banks undertake. If we go to the next slide. There is another category of banks called intermediate small banks. We like to call them mid-sized banks. The regulators actually have an acronym. They call them ISB, or intermediate small banks. I think that is extraordinarily confusing. But anyway, these are banks and thrifts with assets between $250 million and $1 billion in assets. And that's actually roughly speaking because every year that range of assets is adjusted to take into account inflation. They have a lending test, just like the smaller banks, but they also have a test called the Community Development Test. And the Community Development Test looks at aspects of their investment and service performance. And these banks are also not required to report small business loan data. That was a recent change, and actually that was a big loss because these banks are actually specialists. This size of banks, mid-sized banks, they actually turned out to be specialists in making small business loans. And since they are specialists in making small business loans, we would like that data to be publicly available. And that data was publicly available through the year 2004. Some of these banks voluntarily report small business data. And actually we hope that we can reverse that decision that was made in 2005 by the federal regulatory agencies and require banks in this asset category, mid-sized banks, to report small business loan data. The next slide, large bank CRA exams. These are banks with assets above $1 billion, and they have the most involved CRA exams. They have a three-part test, a lending test, an investment test, and a service test. In the lending test, home loans to low and moderate income people and communities, small business loans to low and moderate income neighborhoods, or small business loans to the smallest of the small businesses. And in some cases, consumer loans to low-income people if the bank is a consumer loan specialist. Community development loans, we talked about that briefly. That's like a construction loan for an affordable rental development. That would be under the lending test. The investment test, investments in low and moderate income communities. Some of you on the phone may be involved in low-income housing tax credits, which finances affordable rental developments. That would be a part of the bank's investment test. Also, equity investments in small businesses, small business investment corporations. Those types of investments would be on the investment test. Or grants to housing counseling agencies or other agencies that are serving low and moderate income people counts on the investment test. The service test looks at bank branches in low and moderate income communities. That's very, very important because oftentimes people establish relationships with banks through the branch. You say you're a small business. You initially put your deposits in the bank branch. And after a while you get to know the tellers and the loan officers, and after a while you're a small business, you get a loan through that branch. So the branches are very important, and the branches are also very important People working in neighborhoods around the country know about pawn shops and payday lenders and other fringe cost providers of banking services that are very, very costly. So instead of going to the pawn shop or the check cash or the payday outlet, go to the bank branch and get the same service for less. So the service exam looks at bank branches and is supposed to look at the services that bank branches offer in low and moderate income neighborhoods. The large banks, all the banks report the home loan data. Well, I should say the great majority of banks report the home loan data unless you have assets of below $37 million, approximately. Virtually all the banks report the home loan data, but it's only the large banks with assets above $1 billion that report the small business loan data or the community development loan data. So they have some additional data disclosure requirements as well. We go to the next slide. Exams for non-retail banks. What is a non-retail bank? It's like a bank that specializes only in credit cards and doesn't receive deposits or make home loans. Or it's a bank that serves other banks. It doesn't serve the public. It helps provide financing to other banks. They have a different type of test. It just looks at their community development investments and the community development loans. They have the wherewithal to do financing for low-income housing tax credits, for example, even though they don't serve the retail public. So their exams will look at the community development loans and the community development investments. We go to the next slide. So we talked before about how CRA requires banks to make loans and investments and services consistent with safety and soundness. And in fact, the regulators also say, well, banks should also take steps to prevent foreclosures. And recently there's a question and answer document. You have the CRA law, you have the CRA regulation, and then there are commonly asked questions. How does CRA work? So over the years, the federal regulatory agencies have created a question and answer document. And on this question and answer document, it was just updated, and it was made clear that foreclosure prevention services, you can get points on your CRA exams if you're a bank. Now think of a CRA exam that actually gives you points for foreclosure prevention. It would have been wonderful if mortgage companies had this type of grading system, because mortgage companies would have taken extra steps to be safe and sound. The fact that you have a grading system for banks that say, are you carefully preparing people for home ownership? Are you making loans carefully? After you get the loan, are you carefully making sure that people can make their loan payments? They're engaging in foreclosure prevention when that's necessary. I think that is that's an ingenious grading system that has helped promote safe and sound lending before, during, and after the loan process. And actually, loan modifications can earn banks CRA points on their exams, and that's very important right now during this foreclosure crisis. If a bank modifies a loan that it did not originally make, that was made by another institution, and it modifies a loan, it gets points on its CRA exams. And also, evidence of illegal and predatory lending will penalize a bank on its CRA exam. A bank will get its rating downgraded. The next couple of slides just give you examples of the types of things that you'll see on CRA exams. Helping people with their income taxes. So, some people qualify for low-income people qualify, if you meet the income threshold, actually qualify for a tax return instead of paying taxes. That's called the Earned Income Tax Credit Program. And trying to get those tax returns into a checking and savings account can earn a bank points on a CRA exam. Some of you may have heard of the rapid advance, the RALs, the rapid advance loans, giving you a very high cost loan before you get your tax returns. And this is actually often an exploitative way to serve low and moderate income people. Instead, the reverse is help people channel their tax returns into checking and savings accounts. Some of you might be into providing low and moderate income people with savings and checking accounts. First Franklin Bank, we're actually going to skip that slide, Ada. Then there's a slide that says the National Bank. I think all participants have these PowerPoints.
Yes.
So they can go through these PowerPoints when you have more time. And I just wanted to give you an example of a bank in Iowa. It's not just, urban areas that benefit from CRA. It's also rural areas. And this is an example of a bank that operates in Davenport, Iowa. You go to the next slide. And another bank that's in Iowa, one of our board members is in Iowa. That's why I was a little focused on Iowa at one point. This bank got points on its CRA exams for making a loan to a low-income senior housing complex, for example. Go to the next slide. A bank in Mississippi that gets points on its CRA exams for doing loans to help people rehabilitate their housing and small businesses after Katrina. You go on the next slide. Hancock Bank, another bank in Mississippi, received CRA points on its exam for a $1 million loan to refinance, actually provide a refinance loan for a nursing home. So again, not just only about home ownership, about meeting all needs. This is a need for a community health center. Actually, parameters for CRA exams, let's see. I'm going to skip that because actually we're going to talk about that in CRA mod. But there are some very important concepts on this slide, but we're going to save that for the CRA modernization discussion. I should tell you, the next slide says Office of Thrift Supervision. That's one of the 4 agencies. In the 30 years of CRA, the Office of Thrift Supervision did something very unusual. Usually the federal agencies move in lockstep. If one of them changes the CRA regulation or their CRA exam, then all of them would change their CRA exams and CRA regulation. In the year 2004, something very different happened. The Office of Thrift Supervision was led by a fellow that was very ideological and implemented CRA exams that were very watered down. For example, a large bank could choose 50% of its grade could be on the lending test, and it could choose whether it even wanted an investment test or a service test, and that was very different than the other lenders. So if you're looking at the Office of Thrift Supervision exam, for a student, that's like saying, okay, you're going to have English class, but you can choose whether you want math class or Spanish class, and guess what? You're going to produce a student that's not as well-rounded. And actually, that's what the OTS was doing for 2 years, from 2005 to 2007. But then another director of the Office of Thrift Supervision came, and this director was more pragmatic, and this director changed it so the CRA exams were like the ones for the other federal agencies. You go to the next slide, the merger application process. And we talked about this before, about how anybody from the general public can comment on a merger application. Before a bank can acquire another bank, it has to submit an application to the federal agency and get approval. And we talked about how in the West Virginia's case, if you have a poor CRA record, how your merger can be delayed. The federal agencies actually have the authority to deny merger applications, but it happens very, very rarely. More often you'll have a delay, or sometimes you'll have a merger approval based upon specific conditions. Your merger is approved, but you have to indicate to us how you're going to have safeguards in your lending to make sure that the lending is not predatory, for example. And that's actually one reason why lenders were safer, why banks were safer and sounder than mortgage companies. There was more scrutiny during the merger application process of banks than the lending of, say, mortgage companies. And occasionally a bank was required to institute a safeguard to make sure that its lending process was not predatory. Let's also, my timekeeper saying it's 2:24, but don't worry, timekeeper, I know exactly where I am. We're going to be okay. And we have some more questions. So what was I saying about the merger application process is that I wanted to give another example for, say, people who are doing small business. Let's say the bank was really not nearly as good a small business lending to low and moderate income people as its peers, but it still made a lot of small business loans. The federal regulatory agency would say to the bank, for example, in a merger approval that's conditional, your merger's approved, but once every 3 months, we want to see your data on small business lending, and we want to see a plan on how you're going to improve your small business lending to low and moderate income people. And let's see. There's a slide that says collaboration as well as advocacy, Ada.
Okay.
And that slide, I usually, when I'm doing this presentation to like 30 people, I usually ask people, how many of you talk to a bank about the bank's performance in lending, investing in services to low and moderate income people? And typically, 5 people will raise their hand. And the reason I ask that question is collaboration is as important as advocacy. And what I mean by that is if instead of 5 people in the room of 30 talking to the banks, let's say 25 people of the 30 talk to banks, you're more likely going to have banks in that community doing affordable lending programs or doing affordable checking account programs, just talking to the loan officers, trying to collaborate with the bank officials about how to create affordable loan products, how to create affordable basic banking services, checking accounts, savings accounts, small business products, how to finance affordable rental housing. If you're talking to the banks, if you're sharing examples with the banks of other banks that do this activity successfully, if you're offered to partner with the bank, I'm a homeownership counseling agency. I can refer some of my graduates to, if you create an affordable lending program, I can refer graduates of my homeownership counseling to your lending programs. So that doing partnerships, collaborating with the banks can be also very, very important in increasing access to lending and services. So let me stop there. The last couple of slides are actually quotes from the Federal Reserve Governor. And you can read them on your leisure. But the point about the quotes is the public accountability, the transparency, the data availability, the process of commenting on CRA exams and merger applications. A Federal Reserve Governor basically says in these 2 quotes that this whole process has been important in increasing lending and in forming collaborations between nonprofits and banks. So let me stop there and answer some questions. And then we'll get to the CRA monetization. And it is okay if we start the CRA monetization section like 5 minutes later than we were supposed to. So what are the questions, Ada?
Does anybody in the room have any questions?
I've either done well or I've put people to sleep.
These people in the room are not sleeping.
No, they're not. They're smiling and they are awake. What questions do you have online?
I don't have any.
I do have a question.
Okay.
But I don't want to ask the whole questions.
I think you should ask it. The only question the worst questions are the questions that don't get asked. So you should ask your question.
My question is that there are three areas where they're being measured on CRA.
Uh-huh.
They grade them individually and make a sum of, and that is the final grade, or grade them individually and that's it. In this area, you have a score. What is the determining factor in that?
That's an excellent question.
My question is because a bank can be providing good service to another sector that is no low and middle income businesses or mortgages there. Be doing excellent with the high service and high income residents and businesses in the area. Then my question is, what is the determining factor?
Any reason why we'd be getting a call?
I don't know if maybe he wants to.
Okay. Well, the question from the room is, what really determines the CRA grade? And then we talk about large banks for a second. There are 3 parts to their exam: the lending test, the investment test, and the service test. The lending test is worth 50% of their grade, and the investment test is 25% of their grade, and the service test is 25% of their grade. The lending test is higher because lending is judged to be historically that was what we were expecting banks to do, to make home loans and small business loans. And every once in a while there's discussion about, should we rejiggle the weight of the factors. But anyway, it's 50%, 25%, 25%. Now the question was also, now suppose a bank is making a lot of loans to middle and upper income people. Well, let me just give you an example. Let's say you have two banks that are equal in all respects. They're both specialists in making home loans. Sometimes banks are specialists in making small business loans, but this example will say they're specialists in making home loans. They have similar assets, so they're really kind of equal in all respects. But one bank makes 7% of its loans to low and moderate income people. They both operate in Washington, D.C. And the other bank is making 25% of its loans to low and moderate income people. Well, the one that's making 25% of its loans to low and moderate income people will get a higher grade on its test because CRA is focusing on low and moderate income people because low and moderate income people were the populations that historically were getting discriminated against or redlined. Serving middle and upper income people is important too. But the CRA focus is let's make sure that low and moderate income people are being adequately served.
Okay, we're going to take the last. And then I think this is a really interesting. Whole or branch by branch?
That's a very good question. The bank gets examined as a whole. And actually the branches come into the exam because let's take an example of, well, it was Riggs Bank in Washington, D.C., but now it's PNC Bank. Some of you may be familiar with PNC Bank. Let's say PNC Bank has 50 branches in the Washington, D.C. metropolitan area. Well, the CRA exam will say, of those 50 branches, how many are in low and moderate income neighborhoods? Okay, 20% of the branches are in low and moderate income neighborhoods. How does that compare with the percentage of people that live in low and moderate income neighborhoods? It's 60% of the people live in low and moderate income neighborhoods. It's not normally that high, but again, if it's 20% of the branches versus 60% of the people, the bank would get a lower grade. And also comparisons are made to other banks. What is their portion of branches in low and moderate income neighborhoods? So the answer to the question is the CRA exam is done on the level of the bank, and the branches come into play on the service part of their CRA exam. So I hope that answers the question.
I think that's it.
Oh, we are?
Yeah, I need to switch.
Okay.
Let me just.
So people
let me just-
online, stay online.
Yeah, it's only going to be 5 minutes. So let them know we're going to take a 5-minute break to switch our presentation.
Oh, yes, okay.
And everything, and switch our audience, and a mod at
2:40.
Okay.
So, ladies and gentlemen, we have to switch PowerPoint, so we're going to take a 5-minute break, and we're going to start at 2:40. So please stay tuned. We actually hope you really stay online because we want to strengthen the Community Reinvestment Act. In the next hour, we're going to talk about the bill that's been introduced in Congress to strengthen CRA. And we actually hope that most of you will contact your member of Congress after this presentation and actually ask your member of Congress to co-sponsor the bill, to basically sign on to the bill that we're going to be talking about. So we're going to see you back in 5 minutes or 4 minutes at 2:40.